So today is November 2nd, 2022, and let me start by saying that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today we'll be talking about stock symbol MMTLP, and this is a quick update. We'll be talking about some market action, and I posted a 5-minute video last night, and this will go over what that video was all about, because it was kind of quick and not explanatory. It was actually just asking a question. And there's also some info that happened today with Dr. Susanne Trimbath when she tweeted some info. Anyway, if you're not familiar with what MMTLP is, it's basically some oil and gas assets that are currently being spun out as a result of a merger between two companies. One of those companies was Torchlight Energy, and they have some oil and gas assets in West Texas called in Hudspeth County. It's called the Orogrande project. There's about 3.2 billion barrels of oil in the ground as of the last time that they gave an estimate. It could be more. It could be more now. There's a 49% revenue interest. It's near El Paso, of course. There's a Marathon refinery near El Paso. There are 2 pipelines in the area. This is what's known as private land in Texas, which means you don't need a federal lease in order to drill for oil. So there you go. That's the overall quick overview of that. There's some videos that go on about the in-depth details of exactly how this play came into being. It's about my thoughts on oil part 2 and thoughts on oil part 3. Check out those videos. I will not be going over that info in detail. Each video is about 35 to 40 minutes long or so. So MMTLP is being spun out into a company called Bridge Hydrocarbons, and the spin-out process is currently in progress right now. We have about 4 videos that talk about that spin-out process. Actually, there's 5 videos. We've got these first 4, which talk about the first S1 filing, and then the updates to the S1, then the amendment number 2 to the S1. So we've got the first 3 videos to talk about that. And finally, there's a 4th video that talks about amendment number 3, which was filed, and there were very few changes. So as a result, we're thinking that, maybe, hopefully, it should be very soon, that we'll get an approval by the SEC. In either case, the videos are progressive, so as a result, they assume that you know everything that happened in the previous video. So again, I won't be going over old information about that, but if you want, you can check out those videos. Links will be provided in the description, of course. And finally, to talk about the land and the oil and the gas assets themselves, we have some drilling updates that recently took place. Currently, we're up to 7 drill permits that was recently found, and links are provided in these 4 videos, which talk about the drilling activity that's going on. Finally, if you're brand new to MMTLP, a quick overview can be seen in this MMTLP 1 year of trading on the OTC markets. That will tell you what's going on with MMTLP itself over the course of a year and bring you up to speed very quickly. It's 24 minutes, so it's not too bad. And I recently made a video called the Double Squeeze video, which is actually what a lot of people seem to be interested in doing. It's taking the assets of taking the profits from MMTLP and feeding it back into reinvesting into stock symbol MMAT, which is a parent company. And as a result, it's got a lot of attention and it's got some nice potential for growth there. So this is the market as of today. Okay, the market ended in a sea of red, prompted by the Fed that did something with interest rates or something. I don't know what. I wasn't paying too much attention, but it's a sea of red. The Fed basically said, hey, look, the economy's going to crash. So they crashed the economy and the stock market, of course. And if we look at MMTLP, it dropped significantly today. It went down 6.89%. Wow, are we going to panic sell? And MMAT, interestingly enough, is up 10%. So there you go. Buck the trend with that one. But if you look back just a week ago, we're still up 16% from a week ago. Okay? 16% from a week ago on MMTLP, and we're up 23% from a week ago in MMAT. So that's pretty good. This is the market from a week ago, the 1 week performance. There's some red, there's some green over there. But if you look, the tech stocks are mostly red. They're down 20%, minus 20% on Amazon, minus 8% on Google, minus 30% on Facebook. Microsoft is down about almost 5%. Apple is down about 3% or so. And yet we're still doing well. We're still up 16% on MMTLP and up 23% on MMAT from 1 week ago. Okay. And let's look at the 1 year performance, because everyone says, hey, look, you can't really look at a week at a time. You can't look at a day. The stock market doesn't change that much in a day. So let's look at a 1 year performance. This is what the market was like from a year ago. And look at that. Google is down minus 40%. Amazon is down minus 44%. Microsoft is down minus 34%. Even Facebook is down minus 72%. My goodness, everything's down in there. The only things that are up in the market are the oil stocks, which are over here on the right, the energy stocks, and healthcare. Apart from that, everything looked down, and some are down significantly. And how's MMTLP and Metamaterials doing? Well, Metamaterials is also down. They're down comparable to Facebook. They're down about minus 74%, which is what Facebook was doing. So there you go. What about MMTLP versus MMAT? MMAT is down 75%, almost 74%. MMTLP, they're up 321% compared to the rest of the market. Wow, look at that. Actually, MMTLP has been going sideways compared to the rest of the market, and it has done really, really well in the last in the last month or so. So good things are happening. Good things are happening. I think basically what this says is these two plays by themselves, if you combine them together, they outperform the market as a whole, for the last year at least. But that's just 1 year. So anyway, I had a question that I posted in a recent video. It was about 4 minutes long. It didn't go into details, just said, hey, this is my question. It's about, because I don't know what the answer to this is. If anyone's familiar with Reg Show 203B and FINRA 4320, let me know what's going on. But I think I saw something and give me an idea. But let me go over what this video was actually all about, because in 4 minutes you can't really describe it, except to someone who understands everything that's going on. So in the stock market, there are these things called failures to deliver. You've probably never heard of them, but they exist. The United States Securities and Exchange Commission says you have 2 days to deliver stock after you buy a stock, or after you've sold a stock, you have to deliver that stock to 2 days to the buyer. The buyer, it must be in the buyer's hands by that time. Sometimes that stock is not received by the buyer in those 2 days. That's called a failure to deliver. So you fail to deliver the stock. There's also a fail to deliver money, in which case that almost never happens because the brokers won't let you buy without money. But anyway, fail to deliver the stock, right? And you'd be surprised. You think, okay, well, this can't really happen a lot. We're in an electronic day and age here. We got, things move at the speed of light here. What is this? 2 days is an infinite amount of time. Well, interestingly enough, this is the failures to deliver report from the SEC for MMTLP. And this is just looking from June 1st, 2022, all the way to October 14th, which is the last date that the SEC provides FTD data. FTD is, of course, failure to deliver. You see that big spike at the end? Let's zoom in on that, shall we? That meant that there were 735,000 failures to deliver on 10/13. Failures to deliver are a cumulative score. Somehow, there were 68,000 failures to deliver the following day. Still a very, very large number. There should be zero. Okay? So what was going on with these FTDs? What's going on with these failures to deliver? So let's go on. We'll talk a little bit more about this. So there's this thing called a threshold securities list. And if you fail to deliver, you may wind up on this threshold securities list. So a threshold security, there are two rules that define a threshold security. Rule 203, which is part of Reg Show and in the SEC. And there's another rule, which is part of FINRA, and that is 4320. I'm not going to go over the Rule 203. You can freeze this and check this out if you want, but this is basically my take on Rule 203. Let me skip over to Rule 4320, which I was less familiar with, which is why I asked the question. Rule 4320 defines a threshold security as an equity security of an issuer that is not registered. So the Rule 203B is for equity securities that are registered. This is one that is not registered, pursuant to blah, 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 blah. Where for 5 consecutive days, so this has to happen 5 days in a row, 5 consecutive settlement days, has to happen for 5 days in a row. There's an aggregate fail to deliver position of 10,000 shares or more, an aggregate fail to deliver position which is valued at $50,000 or more based upon the last sale price. If that happens, you'll be on this thing called a threshold securities list. And it's no joke being on this list, or so we're told. MMTLP was on this list. They violated Rule 4320 because they failed to deliver, right, for 5 consecutive days, and they were on this list every single day. They were on this list every single day for 13 consecutive trading days. 13 consecutive trading days. And what happens if you're on this list continually and you fail to deliver, right? And you're on this threshold list continually, day after day after day. Well, if you look at what the OTC at the top of the webpage for the OTC threshold list, it says, pursuant to Rule blah, 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 FINRA Rule 4320, a participant of a registered clearing agency that has a failure to deliver position in a threshold security for 13 consecutive settlement days must immediately close out that failed to deliver position by purchasing shares of like kind and quantity. Wow. That means if you're continually on that threshold list, it sounds to me like you gotta buy some shares. This is Rule 4320 from FINRA. And if we look at Rule 4320, it says at the top, again, if you have a failed to deliver position in a non-reporting threshold security for 13 consecutive settlement days, the participant shall immediately thereafter close out the failed to deliver position by purchasing securities of like kind and quantity. Okay. Now, as far as I know, MMTLP is a preferred share. That means, and it's a special preferred share. It's going to be a share where it's going to provide a dividend that's going to be spun out as an independent company called Bridge Hydrocarbons. Okay. There are no options on MMTLP that I'm aware of. So I don't believe there's any like kind. Now, the question I have is there a like kind? And can someone what kind of like kind can they provide for MMTLP? Or do they have to actually buy the shares? I don't know what the answer to that was. And I asked that question to anyone who might possibly know the answer to that. Along the way, Roller Pigeon saw my video and she said, hey, she's going to make a call to FINRA. So check out her video. She made a call to FINRA and she's going to try to pursue that and try to get an answer to whether or not these FTDs need to be actually closed out properly and by buying the security, and what the penalty for not buying the security is. Who will enforce that particular rule? How's this going? How does this work? Right. That's the main part of that question. So that was the question. Thank you to Roller Pigeons for asking the question to FINRA, and check out her video. It's pretty cool. We also have one last thing that I wanted to mention is I happen to have a mysterious tweet that I said, thank you, Dr. Trimbath. I was trying to figure out what happens to FTDs that did not settle. Your write-up of renets was quite helpful. And in particular, in her write-up, she said that basically if the DTCC would reset fails to deliver to 0 each morning. And at the end of the day, fails are, the total fails are recorded. So this is what's called renetting. And when you renet, these previous fails to deliver are carried at market value. What does that mean? That basically means that, I'll go over that in detail. Anyway, so this was in response to a tweet that Dr. Trimbath had, where she said, hey, look, I've got a new academic article out. Check it out. So click the link at aimpress.com. You wind up to here. So she talks about an academic article about regulatory reform and trade settlement failures in U.S. equity markets. Does regulatory reform matter? It's an excellent article. It's very academic. Click the download and you see this, right? It's where she talks about this stuff. She is, of course, a co-author with Muath Asmer, I think. I'm probably munching the name, but I'm trying my best. Please forgive me. Anyway, if we go down to the end of the article, It's 16 pages or so, but just go and switch down to the end, read the conclusions. And over here in the conclusions, the first part of the conclusion talks about where FTDs are tolerated, the short seller has no incentive to cover, and the trade may be allowed to remain unsettled indefinitely. Indefinitely, okay? And initially, the problem of failures to deliver was because you had to move paper securities back and forth, right? But nowadays, everything's electronic, so we shouldn't have that problem. But the interesting part is the part that I highlighted at the bottom. The DTCC generally, quote-unquote, renets settlement failures. That is, failures are reset to zero each morning, and only at the end of the day, fails are recorded. When this is done, the DTCC's records reflect that failed obligations are no longer outstanding because they've been resubmitted for resettlement, along with any new trades for the day. So regardless of the trade date value, renetted previously failed trades are carried at current market value. Basically means that everything gets reset at the start of the day, and at the end of the day, they just count it up again, right? So what that means is if you had, you might have an FTD that's continually going on for a while, and it may not, it'll get renetted, and it may not actually ever get settled, right? That's not a good thing, because don't forget at the top, FTDs are tolerated, there's no incentive, right? Now, the good thing about us is that we're actually waiting for this to happen, right? This is an S1 filing statement from Bridge Hydrocarbons. It was filed on the 21st. We're now at 12 days since it's been filed. We're expecting a response from the SEC. And how fast will they give a response? Well, here's a quick link to some Wilmer Hale data that tells you how fast the SEC tends to respond. I expect them to be responding sometime very, very soon. And when they respond, this company will be spun out into a non-tradable company, which means shorts must close, which means naked shorts must close, which means FTDs must be resolved. And, those lost FTDs, or the ones that were not counted for, they have to be resolved as well, too. And the stock price could go very, very high. And in fact, that is even written about in the S1 filing statement, that it is possible that a short squeeze may occur. So that's basically all I had to say. This is a fairly quick video. Again, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Goodbye. I will see you on the moon. My name is Tony. I am from Market Moves, and thanks for watching this video. Goodbye.